Good afternoon, traders. Today I will be doing a breakdown of the big tech stocks. So I'll be looking at Apple, Amazon, and Google because these ones affect the QQQ and NASDAQ the most because of their weightings. So we want to see where they're currently standing at and get a better idea of the market. And tomorrow I'll do the market breakdown because tomorrow is we have a long weekend, so we don't have markets not open tomorrow, and we have 3 days to digest the market. And all right, let's start with Apple. So right now we're looking at the daily time frame, and on Tuesday we rejected from this downtrending looking black line here. You can see we have rejected here once, twice, 3 times, and this is the fourth time. So Apple is the pretty much the biggest weighting other than Microsoft for QQQ and Nasdaq. So it's very notable when Apple drops, it pulls down the all the other tech stocks as well with it. So right now it's still in a very healthy consolidation. There is no red flags. For example, if you look at this last time we rejected from the trend line, you can see we had very notable selling, bounced a little bit, and confirmed the daily downtrend right here. And I remember this was something to do with the Fed and their interest rate, or someone said something about raising more rates, or it was an FOMC day. Other than that, we don't have that kind of fear as of lately. You can see we have a very nice uptrend, and it's continuing as well. We set another daily higher low here, and the uptrend's continuing. And now we have set another daily higher low. And you can see the daily 12 EMA, which is this teal looking line, is our guide. You can see we bounce it off of here once, and then bounce it off of here again. And now we just bounce off of it again. So the question for next week is, can the bulls break this level, this prior high, or are we going to drop further into maybe this cluster of volume here, the support, or and then chop around and wait for earnings, because earnings is coming up very soon. Bank earnings are coming up, I think next week or the week following, but pretty sure it's next week. And so market participants will be watching earnings, and when that happens, usually we chop around and consolidate in a range before we get our earnings. And Apple's earnings is roughly around early May, so in another month. Yep, so that's what I'll be watching for Apple, and at least for the daily time frame. And let's go to Amazon. So Amazon is the hourly time frame is at its resistance again. So you can see this orange looking line acts as a support and resistance both ways. And so you can see right here, if we zoom in earlier here. So in late February, this line was acting as resistance over here. And then once we got over it, it started to act as support. You can see we bounced off of it a couple times. And then when we got under it, it's starting to act as resistance again. So that's a zone that I'm looking at. This is also another resistance. So we got over here, and you can see we bounce off of these two wicks as well. And now we are back testing again after we dropped through it, and now it's acting as resistance. So pretty much we closed right at the resistance, so we don't know if it was a rejection or not. You can see we could have just pulled back a little bit and then retest again and get above it, or we could just pull back over and then come back to this area again, and to see if the bulls will end up buying this area again. So if we do, it could be the potential head and shoulders if we come down to this area and then bounce. So we'll be looking for that. Amazon, and let's go to Google. And Google confirmed a cup and handle bullish pattern. You can see this is the hourly chart, and you can see this cup and handle. And then today we broke out, very bullish. Google was the highest performing tech today. You can see we had a very notable move. I think it was 4%, yeah, or 3%, something like that, end of the day. And we hit resistance right away at the end of the day as well. Close around this orange looking line. You can see we rejected here once, got over here, but it was just a wick. Pretty sure that was an FOMC day. Let's see here. Yeah, it was a Wednesday. That was the FOMC when last month Jerome raises rates, and we had this whipsaw. So I wouldn't say this is a getting over it. It's pretty much just a wick above it. And maybe coming up to this area as well. So, and then in this area. So we'll see if all these tech stocks closing at its resistance, meaning QQQ is likely closing at its resistance as well. So let's go to QQQ, and you can see. So we're trading in this area, just Monday, Tuesday, and we finally rolled over. The bears were happy about that, and we came into this area. Bounced a little bit. So yesterday I was talking about how we have a hourly oversold on the RSI, and that marked the low of last time. So you see this bounce here. So we chop around for 4 days here, and we finally broke down, and everybody thought we were going to go. It's a bearish breakdown. Next thing you know, we have a morning breakdown, and the bears cannot follow through this hourly downtrend. And after that, hourly oversold for RSI. We marked the bottom of the daily consolidation, and we just ripped higher. And that's essentially the exact setup here. This was the hourly RSI where we got oversold. It was yesterday. So we went under 30 briefly, and then we bounced. And we dropped in the morning. So this is how usually market makers, or whatever you call it, the algorithm works. So the last time it bounced, and we just went straight up. But this time we trapped. They wanted to trap bears. So essentially they pull it below the prior day's low and grab all the liquidity in this area once we flush through it. And if you were trading this morning, you can see that it was only a roughly like 30 minutes that we were dropping, and you can see right when we dropped to this bottom. I'm gonna go to the 5-minute time frame so you can see better. You can see right when we dropped there, literally one candle in the morning, and then it was just holding, like it just wouldn't go through it. You can see the support as well. This black looking line I draw is a wedge. It's a falling wedge, but it's not that important. It's just a visual guide. But you can see the price action where it's like it just gets bid up every time we try to get below it, and then once you see that the bears cannot get through it, they realize the bull just took over, and then the rest is just history. And we ripped right into resistance. So you can see this resistance zone, 318 and 317, which is where we rejected exactly last time. Go back to the hourly chart. I'm just going to clear the drawing so it's easier for you guys to see. Give me a second here. Okay, so this is the hourly chart, and so we went back right into this resistance zone where we tested a couple of times. See how we bounced back here? We bounced around here again a couple of times, 1, 2, 3, and once we got below it, now it's acting as resistance. Support before, now resistance. We pretty much closed right in it, so I wouldn't say it's a clear rejection because there was not enough time for us to for the market to decide which way it's going. And even if it's not a rejection, we still need a little bit of a consolidation because of this how fast we moved before we can head higher. Or bears need a big enough move on Monday for us to scout a hourly lower high to come from an hourly downtrend. So essentially that's what the bear need. We need a clear enough, big enough move, and then we'll have more confidence in scouting this hourly trend change. Then bulls are back into this area if they're able to get above it. And tomorrow, Friday, there's going to be unemployment data, and markets close. And that's why I took profit on my semiconductor sector short. So that's SOXS, which is the 3x leverage ETF short. I pretty much took profit this morning right away. It's gapped down 3 days in a row for a semiconductor. It's a lot weaker than QQQ. So when I saw another gap down in the morning, I was like, yeah, I just straight up took profit. I didn't really care if it dropped even more because 3 days gap down is a heck lot of profit already for me. And I think I got about 22% for this week. And because the 3S leverage ETF, that means the semiconductor sector roughly dropped about 7%. And that got me like 22% on it. And I scalped a little bit intraday, but that's not important. But what we're looking at is just like all the other big techs, we closed at resistance, and we'll see if those three big tech stocks can actually follow through and break bullish. Then QQQ will likely break bullish as well. And if they reject from their resistance, like for example, if let's say Apple comes back up here and then boom, couldn't get over it again, right? That would mean QQQ will likely not be able to get over its resistance as well. So as Amazon, if Amazon can't get over this and we just form a hourly downtrend, then we're likely going back now for QQQ as well. And for Google, and we can potentially pull back and retest this prior resistance becoming support or not. So we can probably cool down a little bit. And then if it wants to retest again, it will retest again. So I am going to say if I had to predict, I'm going to say we could potentially go sideways in this range. Because if you're looking at it from a bull perspective, there is not, you wouldn't be like, I'm going to go to the daily chart so it's easier to see it for a longer time frame. You're like a bull and you're like, if you look at the chart, would you be like very ecstatic to be getting in the long right now and hold through the earnings, or would you be thinking you wouldn't be thinking bearish as well because of how strong Nasdaq's and QQ has been, right? And we are in a daily uptrend, so there's no red flags for bulls at the moment, but we are kind of extended into earnings, and potentially it'll be an earning recession that the market has been looking for a long time. They were talking about it last quarter or the quarter before, but this quarter is a lot more likely that we'll see a slightly earnings recession. But we'll see because earnings are coming up for banks, and banks have been hit the hardest after those regional banks crisis. So that's what everybody will be watching for, especially if we see very weak bank earnings, then XLF will likely be selling off again. If XLF financial sector sells off, SPY will fall off. And if SPY falls off, QQQ is going to fall off too. So that's going to be key, especially that financial sector has been really, really weak. So we'll see if QQQ decides to continue being a lead bull, or QQQ decides to join the bears and roll over with XLF, the financial sector. And yeah, that's like all I got for you guys over the weekend. And this is a lot more detailed market breakdown. So if you like this kind of breakdown, psychology behind the market, and what I'm looking at internally for the stocks, and let me know in the comments. And I'll do these more often during the weekend and give you guys a better view of what to look for in upcoming weeks and some of the key data to look for as well. And have a great weekend, everyone.